These days, it seems like you can't watch a finance-related video on YouTube without someone talking about how much money you could have made if you invested in Bitcoin or Dogecoin last year or 6 months ago. And to be honest, I'm guilty of doing that too. And as much as the gains in crypto are fun to talk about, let's not forget about the good old stock market and awesome companies like Netflix who have made investors some serious money year after year after year after year. In fact, in the 10 years since April 20th of 2011, Netflix is up over 1,400%. Now that's a pretty solid 10-year return that's outpaced Alphabet and Apple over the same period of time. But since Tuesday of this week, the stock is down roughly 8% after a disappointing first quarter earnings report. Whenever a high-quality company like Netflix drops almost 10%, most people panic and run for the exits. But for me, I love these types of rapid sell-offs because of the buying opportunity they present. In this video, I want to talk about why I'm buying Netflix right now and why you may want to consider adding it to your portfolio as well. And look, my reasoning for purchasing Netflix stock goes far beyond the weak earnings report and the drop in price. I've been analyzing the company for the past couple of days, and I wanted to share my findings and my reasoning with all of you. In this video, we will cover most facets of the company, from the strengths and opportunities they have to the weaknesses and the threats that they face, mainly in the form of competition. Speaking of competition, if you could hit that like and subscribe button, it would help me out tremendously in terms of getting this video in front of a wider audience. I just broke through the 200 subscriber mark, so thank you to all of you that support the channel. I want to start this video off by discussing the bear case against Netflix before we get into the bull case and why I think now is a great time to add Netflix to your portfolio. On April 20th of 2021, Netflix released a letter to shareholders, which I'll link in the description below. It's an awesome read, and I highly encourage you to read it if you're looking to invest in Netflix. Q1 can be thought of as Netflix's correction quarter, with the stock falling almost 10%. And it's not because they lost money or because earnings were bad. The stock price fell because Netflix didn't meet its own expectations and investor expectations. And the biggest reason investors were disappointed is because subscriber growth seems to be hitting a wall. We all know that Netflix was one of the biggest beneficiaries of the COVID-19 pandemic. I mean, just look at this chart that shows global paid subscription ads by quarter. The gray diamonds indicate Netflix's forecasted subscription ads, and the green diamonds are what they actually added in terms of new subscribers. And just look at the numbers, they almost tell the whole story, particularly Q1 and Q2 of 2020. In Q1, they forecasted 7 million new subscribers, but actually brought in 15.8 million new subscribers. Awesome. Similarly, in Q2, they forecasted 7.5 million new subscribers and actually brought in 10.1 million new subscribers. Now, Q3 was a bit of a dud, but in Q4, they hit it out of the ballpark again. But as we move forward to Q1 of this year, this is what investors don't like to see. Now, Netflix projected 6 million new subscribers, but only brought in 4 million new subscribers. But the troubles don't end there. See, Netflix is forecasting just 1 million additional new subscribers in Q2 of 2021, which puts it on its weakest trajectory in many years. Just take a look at this chart. Since 2017, Netflix has been hitting it out of the ballpark, with 2020 being the best year ever. But just take a look at the red line. That's a sharp contrast to what they've been able to accomplish over the past 4 years, and that paints a picture about why investors are feeling pessimistic. If we want to look at some bearish technical analysis, Netflix could be heading for the death cross, which is a technical chart pattern indicating the potential for a major sell-off. It typically occurs when the short-term moving average, in this case the 50-day moving average indicated by the red line, crosses the 200-day moving average, which is indicated by the purple line. As you can see, we aren't quite there yet, but if that happens, we will likely see technical traders and algos start dumping the stock, which would push the price down even further. Okay, so now we've covered the bear case for Netflix stock from an internal standpoint. Let's now cover the stock from an external standpoint, mainly the competition it faces from a swath of new entrants getting into the streaming business. Despite Netflix's 10-plus year head start in the streaming business, the competition is closing the gap. In fact, HBO Max signed up 2.8 million new US subscribers to its streaming service in the first quarter, which was more than what Netflix managed to add. And HBO is far from Netflix's only competition. Over the past year and a half, Disney, Apple, Warner Media, and Comcast have all launched new streaming platforms that in some way, shape, or form compete with Netflix. And that's not even mentioning Amazon or Hulu, who have been competitors for some time now. In the last 2 years, Netflix's market share in streaming has gone from 65% to 50%, and the competition is just getting heated up, which is great for us consumers, but not particularly great for Netflix. The question isn't whether or not Netflix is going to be around or not in the next couple of years. Netflix isn't going out of business, and there is no question that Netflix will continue to be in a dominant position. The question for investors really comes down to how much market share can Netflix maintain over the next 3 to 5 years with so many new entrants and so much new competition. At the end of the day, if you want to invest in any company, you have to look at and analyze their competition. And in terms of Netflix, I really can't think of many companies that are more at risk of losing their throne or their market leader position, but only time will tell. Netflix's growth in Q1 and Q2 of 2020 was extraordinary, and I think most investors and analysts knew that those numbers weren't sustainable for the long term. We all knew that COVID-19 tailwinds would subside at some point, just not this fast. You see, another lesser-known threat to the industry as a whole is the reopening of the economy. Now, I don't see this talked about a lot, but the fact is that as more and more people return to work and as schools reopen, people just won't have as much time to Netflix and chill as they have over the past year. I view this as a threat, but not as a substantial threat, because at the end of the day, the pandemic changed consumer behavior in favor of all streaming services. Because of the pandemic, many people who otherwise may not have gotten a streaming service subscription ended up getting one. And once you start using any streaming service, whether it's Netflix or Amazon or Hulu or Disney Plus, it's hard to revert back to just having cable. Now let's talk about why I think this recent sell-off or correction in Netflix stock actually presents a buying opportunity despite all of the bad news, the competition, and the headwinds that Netflix faces. Since the start of the pandemic, the phrase Netflix and chill has never carried as much weight as it does now. Every person that I know, including my wife and I, use Netflix and streaming services in general more over the past year than ever before. And as bad as subscriber growth was in Q1 for Netflix of this year, and as bad as it's expected to be in Q2, I think things will really start to reverse towards the back half of the year. I think you'll see subscriber growth exceed expectations, and that growth will be primarily driven by new content. Netflix's answer to challenges and to competition is the same as it's always been: produce more content. And Netflix is doing just that. In their shareholder letter, they anticipate spending $17 billion in cash on programming this year. Now that's an unreal number, and for context, they spent $14.8 billion in 2019 and only $12.5 billion in 2020. You see, the slump in subscribers is mainly attributed to a slump in production due to the COVID-19 pandemic. For Netflix, that meant that they weren't able to create content like Bridgerton, like Lupin, like Cobra Kai, which were instrumental in driving new subscribers last year. This is an important fact to take note of if you're planning to invest in Netflix, because production delays meant that Netflix couldn't create new content as fast as they wanted to. And the fact that they weren't able to create new content meant that they weren't able to grow the subscriber base like they have in the past. And for this reason, I don't see the drop in quarterly subscriptions that has so many people scared as a long-term threat. It's a short-term threat that will reverse course as Netflix releases new content this year. In fact, I fully anticipate subscriptions to grow and re-accelerate in the second half of 2021 because Netflix is going to be dropping some highly anticipated shows and movies that feature some of the biggest names in the industry, like Dwayne "The Rock" Johnson, Ryan Reynolds, Meryl Streep, Cate Blanchett, and Leonardo DiCaprio. I personally think the slump in subscriber growth is getting overhyped, and because of all this talk, Netflix is getting oversold. I mean, when you look at Netflix's financials from a 1,000-foot view, things are going just fine. There is no need to panic. First off, revenue grew 24% year over year. Secondly, operating profit and margin reached all-time highs. And lastly, even with the recent slump in subscriptions, Netflix still finished Q1 with 208 million paid subscribers, which is up 14% year over year. If any of these line items were trending in the opposite direction, I would be the first one to say Netflix has a problem. But the fact of the matter is, that's not the case. In terms of the competition, I don't think they pose as big of a threat to Netflix as some people may think. The fact of the matter is that more and more people are cord cutting and getting away from the outrageous monthly fees that traditional cable companies charge. This is not a Netflix or HBO scenario, or a Netflix or Amazon scenario, or a Netflix or Disney Plus scenario. This is what I like to call an and scenario. People don't have one or the other. Most people are subscribed to multiple streaming services. I can't think of a friend or family member that isn't subscribed to 2, 3, or more streaming services. And like I said, as more people do away with traditional cable providers, you can have 3, 4, 5, or 6 streaming service subscriptions, and your monthly bill would still be materially less than if you pay for cable or dish. In the end, I agree that Netflix has more competition, but I also think the pool of potential customers is getting larger as more and more people adopt streaming services and traditional cable falls out of favor. And in terms of revenue, let's not forget about the pricing power that Netflix has. In recent years, Netflix has been increasing their prices, and these days the standard plan is going for $13.99. And even at $13.99, Netflix is a bargain for the amount of content that you have access to. And I wouldn't be surprised if they increase the prices across the board to boost the bottom line this year. At the end of the day, Netflix shares dropped despite beating estimates on the top and bottom lines. The almost 10% correction in share price was almost entirely attributed to the drop in new subscribers. As I mentioned in this video, there is no question that there are some potential risks and threats to Netflix's business, both in terms of technical analysis and in terms of competition. But I sincerely believe that Netflix's opportunities to grow the business outweigh the risks they face. And I didn't even dive into Netflix's management team and leadership, which is also incredible. I mean, Reed Hastings is an awesome CEO. And I didn't really dive deep into Netflix's global library, which is also incredible and will be a key component to future growth. I don't know about you, but I've never watched more foreign shows or foreign movies in my life, and who knew that they could be so awesome? I personally think the market overreacted in terms of Netflix's share price, and that's why I purchased Netflix shares today. Now, I've been looking for a good entry point for a long time, and I think I finally found one. Stock prices aside, I love following this sector because it is being transformed before our eyes. Traditional cable will soon see the same fate as bunny ears as the entire world transitions to online streaming service. I mean, as an investor and someone who's passionate about technology and consumer trends, it's just cool to see. With that, I'm going to call it a video. I hope you all found this analysis helpful, and if you could hit that like and subscribe button, it would be greatly appreciated. Thank you all for watching.